Tell us about the things that you're looking at that are most important that you think long term have proved to be the signal that plebs should
Yes.
be aware of.
No, this is a great question. So there's basically, look, I'd put it down to three core buckets. There's what I would call cohorts. And generally speaking, for the average punter, guys who just want to survive the cycle, you only care about two cohorts: long term holders and short term holders. So that's a dividing line about 5 months. As I said before, it's about statistics. That's why we put the line there. But essentially, the short term holders are coins that moved in the last 5 months. That's the hot ball of money that's kind of following price. These are coins that change hands. And generally speaking, they change hands, then they change again, then they change again, then they change again, and then they find a hodler and they go offline. So
Mm,
they bounce around between people, and then gone. Now they're out in long term holder supply. What happens during bear markets is the speculators go, the fever goes, all the momentum, it kind of just dwindles. And the only people who are left are the hodlers. So over time, that short term supply goes down and down and down and down, and those long term holders take the coins. Now, long term holders, they are typically most active at market extremes, and there's three of them that really stand out: market bottoms. And what happens at market bottoms is long term holders, I mean, 5 months, bear markets go for a year. So the
mm,
guys who buy the top hold all the way down, they become long term holders and they puke everything out at the bottom. So we call these the first cycle long term holders. We've all
mm,
been there, we've all done it.
mm,
So essentially, those first cycle guys, they're present at the bottom. The second time long term holders is present is when we break our all time highs. And again, there's no guarantee this happens, but it has happened every previous cycle. And psychologically, it makes sense. The guys who then buy the bottom, right, off those long term, those first cycle guys,
mm,
they hold on to the coins. They see Bitcoin rally from 16K to 70K. Maybe they go, yeah, give me 80, give me 90. Now they start to spend. And they don't spend all at once. They just start to go, oh, take 5% off, take 10% off, take 20% off. And what you see is long term supply stops climbing and starts actually decreasing. But there's enough demand coming in. Larry Fink's on TV. Michael Saylor's pumping the bag. There's people all over the place. Podcasts are going nuts. Bull market is when new demand comes in. And these long term holders, they know this is happening. So they start to just lighten the load and they take profits and they go and buy themselves a car. They go and buy themselves a home. They go on a holiday, right? You've seen your money go up by 7x. So the other time they're present is at the tippity top, because that's when they essentially go, all right, things are really frothy, right? And you just look at the more cycles you go through, you're like, that's a top. You look at Twitter and you're like, that's a top. I can see like, shit coins are going through the roof. People are buying like JPEGs of, whatever it is. This is ridiculous. It makes no sense.
yes.
This will be over in about 3 months' time, right? And that's when they really start to sell. So the long term holders are present at those extremes. The short term holders dictate everything in between those three extremes, right? So that's
Mm,
cohorts.
yeah.
Now, we apply that cohort framework to the key metrics. Now, the key metrics are: how much supply do they hold? How much of that supply is in profit or loss, right? What you're looking at there is how many coins have they got relative to the other team? And the
Mm,
other one is, are they healthy? Are they happy? Or are they pretty scared? Are they in a lot of profit or are they in a lot of loss? The other metric, and there's really two, the only two oscillators that the average pleb needs to learn. So learn about your cohorts and your supply, learn about MVRV, and learn about SOPA. Now,
mhm,
those two are actually sibling metrics, and they are, in my opinion, the most important metrics. You can also extract the cost basis for these cohorts from that as well, which is important. But essentially, MVRV is it's like an oscillator. It shows how much profit or loss they're in, right? That they're holding. SOPA is how much they're spending. So you've got the amount of profit that they're in on coins they still hold, and you've
mhm,
got the amount of profit that they're taking and actually locking in, either by fear and capitulating at a loss or taking a profit.
mm,
If you learn those buckets, that is essentially human psychology in a nutshell. Think about some of these combinations. Short term holders hold a huge amount of the coins. What does that tell you? Long term holders own very little. The smart money have exited and the dumb money hold everything. I don't want to be in the trenches with those guys, right? And then you also see that they're in a ridiculous amount of profit and the smart money is spending and locking in big profits. That looks like a top,
yeah.
right? The other side of the equation: when do you want to be starting to enter the market? When the smart money owns the maximum amount of supply, you've seen a massive red candle. All the dumb money and the long term holders have all capitulated a massive loss. that's full scale decimation, bottom is in. So you kind of look for these like human incentive structure. What does the top look like? Dumb money hold everything. What does the bottom look like? Dumb money hold none of it, right? And you're oscillating between these two extremes, and that's kind of the
That's
crux of it
awesome.
all. That's all it is.
Awesome. Yeah, that makes sense. Because I suppose we try and gauge what's potting on Twitter, and we'll go like, there are certain, tops, as you say, where you're seeing like monkey JPEGs going for millions, or when I think Paris Hilton was on, they're all unfunny, but those late night show
Oh yeah,
guys bragging about their, oh,
shilling
I've
their
spent
apes.
$250,000 for this, this ape pick, and you're going like, what is going on here? This is fucked. And so
Yep.
I think those were the signs, and I imagine that must have been very close to the top.
Every
Um,
single one of the metrics that we just described was lit up like a Christmas candle when this was happening. So,
oh
and
yeah.
that's what I love about it, right? You just look at the Bitcoin chart and you're like, okay, I'm seeing like 15 of my metrics are all, lit up. I know Paris Hilton's on TV. I don't even watch TV, but I know she's on TV right now talking
Mm,
about Dogecoin, right? You can
yeah,
guarantee it.
yeah. So, with that said, though, isn't I would have imagined that these long-term hodlers are people who are just going for the ride, because that's been always the mantra, don't try and time the market or anything like that. Don't try and scoop profits, because you're effectively going to forego some sort of massive upside. But what you're saying is interesting. I mean, the patterns there are telling you that these people are. Would you imagine that these are people that have been in it for a lot longer? So, if your cost base is like $500, you're not going to have a heart attack if you're selling at 40, whereas you're less likely to try and sell if you got in at 20 kind of thing.
Correct. No, absolutely. And look, there's a lot of dynamics here. Some of those, and if you think about the long-term holder chart, I haven't got obviously got this in front of us, but it's like a big wave that puts higher lows and higher highs. It's just continually like grading higher and higher. So at the bottom of the bull market, sorry, at the bear market, sorry, I get this wrong. At the top of the bull, when they've sold everything, right?
Yes.
They've got the minimum amount of coins. That minimum is always higher than the previous cycle minimum. Much the same as the price chart. We continue to go higher. We get to these new plateaus.
Mm,
Now, there's no question. I think you're absolutely right that, I mean, if I describe the typical cycle, this is probably my cycle. I got in 2018. I bet on shit coins in 2018. I lost everything twice. Then I finally learned about Bitcoin in 2019 and just got, oh, okay, it makes sense. Now I'm going to start accumulating. And I was in the mindset you described before. I need to just hold this thing forever. As I go into 2021, that was actually my first bull market. I mean, 2019 was kind of a bull, but really 2020, 21 was the first bull. From that point on, I was learning a lot about this stuff. And I got UTXOs from 50,000, but I got a lot more at 20 and I got a lot more at 10, right? Because
mm,
back then is when I was learning about it. And, I'm still going through that process of learning like how the market shifts and moves. Now that I've been in the market for 6 years, this cycle, if it gets to I mean, I'm not in any rush to take profits, but if it gets to a big number that's life changing, yeah, I'll take 5% off and change my physical life, right? I will
mm.
I'll convert it into a house. I'll convert it into some kind of lifestyle change because it's my savings and that's what I want to do with my savings. But I think you have to go through multiple cycles before you're willing to let go because you actually need to stack the bag. You've got to get enough coins that you're like, I'm happy with my life's work, right? It's that nest egg that you're willing to get to. So I think that's a big part of it. So yeah, you got to go through a couple of cycles. You got to learn the momentum. And maybe on your second or your third, you're like, I actually know what a top looks like now. I'm not buying the top. Even though I did
Yeah.
it in the first cycle, I did it again in the second cycle, not as bad, but certainly still near the top. And here I am, like, I can see the top. All my metrics are telling me when the top is. It's not now. So I'm just going to sit tight. When it shows up, I'll probably let it run for a little bit longer because that's what Bitcoin does. But I'll slowly start to exit when all my metrics are lit up. I'd be a fool to not listen to my own advice.
Okay. Well, I'm going to give you a call then. Okay.
I mean, there's websites that do this.
Because to be honest, it's like obviously I feel perpetually short, but at the same time, I also do know that if there was some sort of silly price action and I had an opportunity to sort of just take control of my life and do whatever I want and pursue my dreams,
I mean,
I'd
Bitcoin is a savings technology. What are you going to do
yeah,
with your savings? Change your
that's the
life.
point. But I'd also do so knowing that I might be leaving a lot of money on the table. I might be foregoing some even bigger returns. I suppose that's
And
just
that's the
the
thing, right? I mean, I think the best way to think about it, right, is you're trading Bitcoin for something else that is scarce either in a physical sense, like
Yeah.
property or gold or whatever it is that you want to actually reallocate to, or you're buying something that money can't buy, which is life, right? And both of those two things are worth spending your savings on. That's the frame of reference, right? You're spending it on something that's worth more than the Bitcoin at that point in time. Happy days.